I've been investing into crypto for almost 10 years now, and in that time, I've made millions of dollars that we've called publicly on this channel, but I've also missed out on tens of millions of dollars too. Had I known these lessons that I'm going to share in this video, I'm confident I would have not only made hundreds of millions of dollars more, but I would have known how to realize most of those profits. So in this video, I'm going to be sharing with you my brutally honest, near decade worth of crypto advice through 25 key lessons that I truly believe can change your life. A lot of these lessons took me years to learn. It cost me a lot of money, and I think there is nothing more valuable than I can provide to you through this rectangle little screen that I'm stuck in today than by sharing these gems of the industry that nobody will ever tell you, and statistically speaking, most of you won't learn until it's too late. Starting with key lesson number one, understanding the true difference between investing and trading. Look, before you even make your first trade, you need to know this. There is a massive difference between being an investor and being a trader. The main differences here are that investors think long-term. They think month to years versus trading where you think short-term. Now, traders tend to profit from more short-term price action. You want to react fast. You want to catch the little scalp, the day trade, where in investing, you're thinking much grander than that. Now, both have their pros and cons, and you can eventually learn to master both. But here's the truth. You need to learn to start with one. And right now, the new meta going into 2026 is this. When the market conditions within crypto is right and things are all going up, anyone can become a successful investor. Looking back at 2021 and even during parts of 2024 and even in the beginning of the year 2025, pretty much anyone who was able to nail just a few trades while everything was going up was able to make money. Nowadays, everyone knows about Bitcoin. The awareness is already there, and you lost first movers advantage in being able to reap the most significant portion of the upside as an investor. The same analogy here works as if you were buying into Facebook stock or Amazon stock when it had just IPO'd. Now, if you decide to buy any of those stocks because the companies are so big, you're not going to see the upside that once existed before. Now, contrary to that, you have trading. Look, there's a lot of stigmas on trading because most people don't know how to do it right. Without having proper trading systems, most end up just gambling. But what I've learned over the last year is that trading is truly one of the best ways that you can capitalize on the market consistently without having to wait for market conditions to improve. But what I'd say the new meta is that you should always learn to refine and build your own system so that you have an edge in trading, and when market conditions improve with investing, know how to separate your portfolios and then ride the wave when the tide is behind you. And from that, understanding that trading right now is still the best way that you can make money long term, as long as you have a system that you can trust. One of the next most important lessons that I've learned from being in the space is understanding how you can properly identify your own edge in the market. Now, finding your edge in crypto is one of the best questions you could ask, because without an edge, you are simply gambling. Now, let me break it down a little bit more clearly to you. Number one, you need to study your natural strengths first. Look, there is so many different ways that you can make money in crypto, and there are so many people who have brains that are wired differently. As an example, if you're a little smarty pants back during the school days, you're good with numbers, maybe you're an accountant, maybe things just click for you easily when you're able to see charts and patterns, you're going to be a killer day trader. But if numbers aren't your strong suit, if consuming information is easy to you, you love just hearing what's happening on the news, what's going on with the economy, you may be able to front run narratives. From here, you want to figure out what feels most effortless for you. So every single one of you guys have different gifts. It's why most humans are naturally geared towards being in a certain subject. This is where it's important for you to understand what kind of content do you naturally enjoy consuming. Your edge usually aligns with your natural thinking style. The importance in finding and discovering what your edge is that work won't feel like work. And when others get burnt out, you're going to be able to succeed. So to me, this feels like Pokemon. You know, you starting up the new game, you figuring out if you want the Charmander, Bulbasaur, or Squirtle. For me, when I first got into crypto, I was able to spot narratives a lot easier. There was a lot of value in being able to do that back in 2021, but as the market conditions have continued to change, where I think most people are going to find the most value is actually being a technical analysis trader. Now, long-term investing is also great, but it's not as fully utilized in crypto as it once was before. That doesn't mean that you won't be able to find the next Sol, ETH, or AVAX. There are going to be those plays that are lining up, and they are going to provide tremendous amount of return depending on when you're watching this video. Now, I know a ton of people who might suck at marketing, they might suck at spotting narratives, they might suck at doing research, which, by the way, when you're researching within crypto, simply all you're doing is just looking up the project, going on the website, vouching if it's a scam or not, going through the community, seeing if it fits within a narrative and if it can run. Say you just suck at all of that for some reason. Say you suck at long-term investing. Well, if you're really good at being attentive to the news, you could leverage that as well. In the past year, 2025, we've had multiple instances where there's literally one tweet that comes out, tariffs are paused, tariffs are resuming, inflation was this, inflation was that. And you could simply left curve auto long, which means you just don't think about something and you just press the trigger and you're able to make money. Those setups aren't happening every single day, but when those setups do come, you have a higher probability of being able to hit. Now, say you suck at that too, which is okay. I'm not here to judge. You can also learn to leverage your community. Look, whether it's you getting into private groups, finding OTC deals that you can capitalize on, or being a community contributor into certain Discords, if you get into the right communities, that alone has been the biggest edge where I've seen some other people succeed who just got into crypto. Now, by the way, you do not need to master all of these different ones. You just need to know one, get a good enough deep understanding of it to gain that statistical edge. The people who truly win in this market aren't the ones that are constantly just copying others. They're often earned by knowing yourself better than anyone else. So in short, this is important, okay? It's work, and work is what allows you to make money in these markets, and it starts by understanding yourself. It's by then testing different areas of narratives, trading, investing, news, the ability of you doing research, and from there, it's tracking your wins and your losses objectively. Once you have discovered where you might have a slight edge in, where you're able to succeed where others can't, this is where you can specialize in building systems around your strongest lane. The next brutally honest truth that you have to learn about this space is understanding crypto from a non-biased standpoint. Look, I grew up being overly bullish within the crypto space and having the mindset that everything is going to go up. It was really most recently in the last few months where I've started to develop this mindset that 95% of all coins are just scams. I'm doing this because I need to compensate for my over optimism of the market. But if you happen to be on the opposite end of that and you tend to be more pessimistic, you already came into crypto assuming everything was a scam, that might also even work against you. Now, whatever you decide to believe, you want to get as close to being as non-biased as possible. This is because generally, most people in crypto, they don't come to invest, but instead they come to marry their own bags. All right, so what does it mean to marry your own bags? It's like saying you like a certain project, you like a certain coin, or being tied and bag holding a certain coin because you're saying that it's going up. Look, I know most of you guys have felt this way. Some of you guys still do now, and I know because I've been there too. I've been emotionally attached to my coin. I convinced myself that this is the best project, that this is better than all the other meme coins, even when the price action says otherwise. I've been at points where I only read bullish content and I tell myself, you know what? If anyone says anything negative or it seems like crap, I'm gonna ignore it. Now, this is a very slippery slope because you begin to ignore red flags, and this is where I've lost more money than I can count. Be non-biased. See crypto as a vehicle for opportunity, not an identity that you wear. Be willing to cut losses when a project weakens, no matter how much you actually liked it. Look, don't get me wrong. There are projects that I still think are valuable, but regardless of how I feel, the market does not care. It still has gone down. Look, if I'm being honest, obviously, yes, I want everything in the market to do well. I want everyone to win, but that's just not the reality of the truth. Things will go up, things will go down. I want you guys to make as much money as you can in these markets, and that's why I'm saying it here. So to test whether or not you're non-biased, you can ask yourself these 4 questions. Would I still buy this today at this price, knowing what I know now? Have you really studied both sides by understanding the bull case and the bear case before buying anything? Are you following people who just align with the way that you're thinking and you're stuck in your own echo chamber? When you open up your Twitter feed, is it all people just shilling one coin because that's what you want to hear? Or are you actually following people who are challenging the way that you think? The mindset shift that you need to hack, and I'd write this down if you have a notebook in front of you, or if you're just, I don't know what you're doing, but just this is important. You're not here to love projects. You're here to grow your capital. The project that you love does not know who you are. This is a one-sided relationship. This is a terrible marriage. Your loyalty to a project will not make you money. So this right here was one of the hardest lessons I've had to learn over the last 10 years. And it was that just because I liked a project or understood its vision, it didn't mean that it was still a good investment. In crypto, it's easy to get all googly-eyed about something because you buy it, you've seen yourself go up, and when it goes down, you get even more fixated on it. As I've said before in this video, and I'm gonna say many times again, the market does not care about your feelings. So stay objective, stay ruthless, and be willing to let go even of the ones you once believed in. Lesson number 4, Don't force trades, and don't think you always need to participate in the market. Look, one of the biggest mistakes that I made that has literally on the top of my head, I know cost me multiple 7 figures, was thinking I always had to be in the market. You know that feeling when literally everything is going up, things are moving, and you're just itching. You're like, what do I buy? What do I buy now? Because everything is going up. I need to have exposure to something, and you're feeling that FOMO. Literally, because you're not in more positions, you feel like you're losing, even though your portfolio is still going up with the few positions that you have. In those instances, I've forced trades, I've chased setups that weren't clean. At some points, I remember just buying because it felt like it needed to be done, and sometimes it would reward me. But in the most recent times in doing that, I've lost a majority of my portfolio. So the biggest lesson here is do not force a trade. Even though it might work a few times, eventually it's going to lead to more losses. Now, some of my worst red days didn't come from bad luck. It literally came from me doing this. It came from me just trying to find a way to FOMO into something, getting lazy and just aping and buying something. If you're doing that and there's no clear opportunity, you didn't do your research, you're simply just gambling. The truth of the matter is it's easy to get lazy in this space, especially when you're looking at 100 things at once. People are making money all around you. And when the market gets euphoric, naturally, that's what everyone does. That's why the bull market runs up as high as it does. But here's the lesson. The best traders aren't always trading. They're waiting, they're hunting. And when the time is right, that's when they strike. So if you don't see a clear play, be patient. The best moves oftentimes is to just wait, be patient, and get in on the next setup. Fifth big tip here, markets are often more irrational longer than you can stay sane. Well, what does that mean? Even scams can pump and good projects can dump. That is the headline. When you get that, print on some merch. In my times of investing into crypto, there were multiple times where I knew, based on token supply, based on the research, the alpha, that a project was not just a scam, but it was complete garbage. Literally, guys, this has happened more times than I can count. And the crazy thing is, those are the projects that often run. So what happened? Well, I would refuse to touch the project, but I would see it pump 3x, 5x, 10x or more before finally, eventually, the garbage ends up doing what garbage does. It just disintegrates. Now, it's in those very same moments where I've realized, just like bad projects can pump, good projects can only just dump. So there is a lesson where you have to realize that even though you deem a project good, tokenomics may look good, the utility of the project looks good, it can only just go down because there is no true correlation between how good a project really is versus the performance of the token's price. So just understand this, the market does not care about what's logical in the short term. You can be right, you can be too early, but you can still lose. So in crypto, what I like to do is instead respect the momentum, respect the hype, respect the mania. And even when my brain says it's irrational, I just keep myself focused on the systems that I've built. This is very similar to what even happened with Trump trade. I think a lot of you guys can recognize that. Most of you who ended up aping into it, you're probably left curving it. You're probably like, you know what? This is the president. You bought in, boom, clear as day. For me, I was like, oh, there's no way this can run up so much. If this is even Donald Trump releasing his own meme coin, people are probably going to sell if people are up this much. But that thing ended up going up, up, up. And I've realized oftentimes, guys, regardless if something is legit or a scam, the markets will remain irrational. And this is a much harder game than most people anticipate. So the solution to all of that is I don't fight the market anymore. I just find my spots, I manage my risk, and I ride the wave. Next tip here. Markets are forward thinking, and 90% of everything in the market has been priced in. By understanding this concept, you're going to save yourself millions. A lot of the times you might come across some kind of information like, oh, the tariff, this is going to happen, or oh, this project is coming out with this update, or Sui, they're going to be on Pokemon, and you think you're the first mover on it because you saw it on Twitter before it even had 1,000 impressions. But you have to realize that the market is always ahead of you, and it's able to move before you can. Look, there will be the occasional time where you end up getting news before someone else, but I can't tell you how many times I'd wait for some major event to happen, like an airdrop, a token unlock, or some big collaboration that's supposed to pan out, thinking that was going to be the big moment and the price goes up. But oftentimes, guys, it's like the meme where you have the guy pointing the gun at the guy, pointing the gun at the guy, pointing the gun at the guy. Now, the rule that I follow is simple, and it's been working extremely well. If you're hearing the news and you haven't done extensive research, or you think you just got lucky, generally, you're already too late. The best gains do also come from buying the rumor and then selling the news as well. So instead of getting sucked in saying, okay, this is really it. This upgrade is really going to be the moment where everything is going to work more efficiently. Ethereum is going to be deflationary and I'm going to be able to capitalize on this market. No, just assume everything that happens is going to be sell the news. Every big update, every big announcement, if you assume that it's buy the rumor, sell the news, you're going to at least be able to protect yourself from further losses. Next tip here, do not front run, but instead get confirmation. Now, most people who are new to crypto always end up making this mistake, and I see it on my Instagram and on Twitter still so often. And this is where someone says, buy the dip. Market went down, buy the dip. This is terrible advice. Look, when you're investing long-term, I get it. Buy the dip, average into your position, but this is assuming that this is something that you're buying for the next 5 to 10 years and holding long. Assuming that most of you guys are actually trading these markets instead, you don't ever want to front run. You want to get confirmation first. One of the biggest mistakes I made early on was confusing when to front run and when not to. When I was trading, there are times where I want to just buy the dip. I want to capitalize on as much upside as I can. I would feel the fear in the market. Things would go down 15%. I'm like, okay, it's scary. Let me just buy the dip. It's worked out a few times before. Let me just keep doing it again. Look, most people do this because they want to do it for their ego. They want to jump in as if you're a superhero, saving someone from an oncoming train. These markets are very irrational. A dip could always end up dipping, and this is where actually 80 to 90% of retail ends up losing their money. So as I mentioned earlier, front running when you're investing, that's fine. You can do that. You have a longer time horizon, but most of you guys are actually trading. Even if you're investing, you're doing it for a shorter period of time. So if you're doing that, you don't want to front run. You want to wait for confirmation signals. You want to be reactionary so that you can protect your capital. Now, the negative here is that if you don't front run, you're going to miss out on significant gains, but that's okay as long as you increase the probability of you winning. So what it really is understanding the difference between the two, trading versus investing. If you wait for confirmation as an investor, oftentimes it is already too late. So the most important thing here is you need to know which hat you're wearing or you're going to end up losing both. All right, this is another key lesson. This is going to apply to every single person watching this video. And this is in those moments where you've seen something run up and you've screenshotted your portfolio, screenshotted the gains. Those are the moments that you should sell. Look, just drop a like on this video if you guys can relate to at least this moment here. You've screenshotted your portfolio and that literally marked the top. So let me explain why this whole thing works. When you're feeling euphoric enough to screenshot your portfolio and you can't believe how much it's gone up, those are usually the moments where everyone else in the market is feeling a similar way. And when you're in crypto, everyone's feeling euphoric. Well, you should know this by now. That's when smart money begins to sell. So the rule here is simple. If you even feel an urge to screenshot, sell something. You don't have to sell 100% of your bag. You can sell 25% of it, 50% of it. But whenever the next bull run comes around, have this printed out. Remember this forever. And if you have the urge to screenshot, take profits and sell something. By doing this, you're respecting what we call an emotional top. And trust me, markets, when they get euphoric, everyone becomes emotional. Now, the next big lesson that I've also learned is that if you develop good systems, you're disciplined and you're making money, eventually you're also going to get punished for following a working system. Look, there are times where I told myself, okay, I'm going to sell 20% at this price, 50% at this price. I'm going to follow and be strict, and things still go up. There are also times where I follow my system perfectly and I still lose money. Well, at least in the short term. This here is just a reminder that even the best traders in the world do not have a 100% win rate. The best investors in crypto do not get every single play right. But here's what's important. If you know to stick to a plan, to follow and trust your system, even in the times where it might not be paying off, you can still find positive wins in that lesson, even if your portfolio may not look like it's winning. So recently, one of our moderators within Kaizen has begun trading and he's been hitting a few wins, but he made a post and he was like, you know what? This is why I never trade weekends. And on weekends, you could see that he was in the red. I told him, you know what, Ken? You actually did a good job because on the weekends, you reduced the amount that you lost to even just $100. But on your winning days, you've been making $1,000 or more. That here to me is a win. Even though he didn't hit every single day right, no one can. But what's most important is that he was able to manage his risk well, his levels were clean, his logic was sound. So keep in mind, guys, following your system doesn't always guarantee that every single trade will work, but it does guarantee that you survive long enough to let probability still play out. In this game of trading and investing into crypto, short-term punishment for good decisions is going to be normal sometimes. It's all part of playing the long game. game. You set yourself up to maximize on the best returns and you minimize the losses that could happen. The next lesson that has helped me succeed immensely in this market is knowing to speculate less, predict less, and react more. The most dangerous thing that you can do in the world of crypto is assume. This here is the most retail thing that you can do, where you end up getting dinner with a few of your friends that have gone into crypto. You end up getting a cup of coffee for breakfast, and all you guys do is speculate and predict on what's going to happen this year. Look, one of the biggest traps that I fell into, especially early on, was thinking I had to predict everything. I had to get things right. I had to be the guy on YouTube who was able to call the bottom of the market right and to call the top of the market right. But why? Well, I thought real success meant calling the top, calling the bottom, being that guy who can predict things well and being the next Asian GCR of this space. I mean, how cool is it to be able to predict things? People treat you with more respect. They think that you can get things right all the time, and it's more empowering. It's good for the ego. It feels great. And if you're the guy within your friend group who always gets things right and they're asking you questions, look, it's a cool feeling. But here's the truth. Every time I built my strategy around prediction instead of reaction, those are the moments that I've lost money. If you're trying to predict, what will happen is that you're going to hold a position way longer than you should. Surely because of the reasoning that it's going to have to pump again soon. There are moments where I'd overexpose myself because I know the next altcoin season is definitely coming. Look, true wisdom lies in the fact that the market does not care about what you think. Surely someone is going to be able to predict the top of the market once right. Maybe they get it right a few times, but the market is objective. And the reality of the truth is, you can guess and you can get things right, but no one actually knows how the future will look. What you can do instead is be reactionary and set yourself up for a series of actions that you will deploy when certain things pan out. So trade based on signals, not based on your emotion and your speculation. If you have people sitting around speculating on what's going to happen next, unless you're using those predictions to plan out the next reactionary moves you're going to make, it's a waste. Here's a good example. 2021, everyone thought Bitcoin was going to hit 100K before the end of the year. I thought that was going to happen because I was a newbie investor. Instead, what happened was it topped $69,000. Everyone was wrong. The crash began and about 90% of people ended up holding their bags. I don't want that ever to happen to at least the viewers of my channel. So the second you start assuming the market owes you a fairy tale ending, you're already slipping. You're already losing. The market doesn't owe you anything. Lesson number 11, young kids dominating this market. This one is something pretty fascinating, and there is an edge that you can build from this. Now, for the first time in 2024 is when I was starting to see 13-year-olds who started out with like $1,000 or even less than that, turning that into millions of dollars by trading it in crypto. In most industries, like if you're trading stocks or other equities, generally the older you are and the more experience you have, the better you tend to perform. That's why you're never going to invest into an 18-year-old kid with his own hedge fund. You'd rather invest into the 60-year-old who has multiple years of experience under his belt. But when it comes into crypto, age and experience really doesn't discriminate. I've met 17-year-old kids, 18-year-old kids, 19-year-old kids, and they've been finding plays faster, moving quicker, and adapting quicker. Meanwhile, a lot of the veterans or the Bitcoin enthusiasts and people who have been investing for decades or more were the ones that were getting destroyed by those same kids. In this newer market, just realize this: talent beats resume, hands down. Speed beats experience. Being able to adapt beats any traditional way that you've held your investments. So it's not about how long you've been around, it's about how sharp you are and how fast you can spot new narratives, new metas, and make the move when it counts. So if you can't respect that shift, understand this: you're probably going to get left behind. And if you're seeing my little screen recording here, one of my favorite shows, Malcolm in the Middle, the future is now, old man. And look, guys, I'm getting old too, all right? I'm on the older demographic now. I thought I was young until I keep meeting these young kids and they keep calling me Unk. Out of all of that, the one thing that a lot of young kids have that allows them to dominate this market, though, is the fact that they know how to get tapped into a community and they are putting in many more hours than someone older can. All right, this next lesson is something that needs to be said, and this is the fact that most people think Twitter is where all the gems exist for you to be able to find the next alpha. But here's the truth. Twitter has now become just a mid-curver's paradise. And I keep saying left curve, mid-curve. Mid-curve is basically 90% of people right here in this middle percentile. You have the people who are drooling on one side. This is the left curve. And then on the right curve, you got your Albert Einsteins, all right? They smart. I don't know how to show that. Everyone else, you and I, we are fitting within the mid curve. Okay. Now, what 90% of people in this mid curve do is they go on X to find info. X is a platform where you can get info fast, but it's where you have very few experts left. It's where a vast majority of people are now on the lower end of the demographic. You're either left curve in it or you're mid curve in it. So be careful about how much you consume on X. It's good to be able to do research, but don't be reading so deep into these threads where it just makes you overanalyze everything. A lot of the times people are just making overcomplicated threads so that they could either sell their Telegram group or get you to sign up for their Photon link or whatever it is. X right now is just making people overthink things where they're already on the spot. This is where I've seen a lot of people second guess their own trades and their strategies because you're listening to noise and not real facts, not real signals. So my rule is this: I follow only a handful of real killers. If I'm following anyone, just so no one gets offended that I unfollow them, I just mute the noise. I've gotten to a point where I trust my own system over some random 10-part thread that I see on X. There are now way too many mid-curvers there, and oftentimes it's gonna have you doubt a winning trade and following a losing one. A lot of the times the best alpha is not gonna be on X anymore, but it's gonna be within communities. It's gonna be in Discords where you're able to filter out a lot more of that noise. That's why even communities with a paywall, I know it sucks paying for things every month. We already got Netflix and Disney and 100 other things we're paying for, but that is the paywall that prevents a lot of the left curvers or people who really don't know what they're talking about from being a part of a community. Look, I can't tell you how many times I second guess my plays just because some guy with an anime profile pic posted a 20-tweet thread on why the market was going to collapse. Half of them are now just chasing impressions. They want to get views. Most of them are not actually risking real money. So folks, take a lot of the things that you read with a grain of salt and start to just truly believe your own instincts. And this comes from the act of journaling. Be conscious and aware of the actions you take. And from the viewers of this video, there are going to be some superstars that shine out. All right, so this next lesson here is pretty important. It can save you relationships. It can protect you from having any falling out with loved ones. And this is where if you are in crypto, you're making money, you're going to have people reaching out to you. They're going to somehow find out that you're cooking. They're going to ask you about what they should buy. Before you tell them what to buy, understand this. You can lead a horse to water, but you can't get him to drink. Early on, back when I was starting YouTube and back when my Discord community was in its infancy, I used to think helping people one-on-one with trades directly would always end well. So usually what ends up happening is that someone is going to end up getting into the market, you give them a play, they'll probably lose money. So here's what you got to do. If you ever share a play with anyone, or if you think there's a crypto that you're getting into, give them all the right disclaimers. Tell them exactly where they should be selling and let them know this could go to zero. And if it does, you better not come for me. There are many, many times where I'm leaving the house, someone recognizes me and they ask me, Brian, what crypto should I buy? I literally say, I don't know. It's not because I don't know. I mean, there's probably 5 to 10 plays that I'm bullish on in that moment, but even if I tell them, statistically, even if it goes right in the small chance that it does, I'm giving them a loaded gun without a safety. Even if it does end up all playing out, eventually they'll want to get back in the market. They're going to either ask you for more or they're going to try to do it themselves and they're going to lose money there. The big takeaway here is that if you help someone, just understand that people are going to remember their losses way more than their wins. Greed blinds people after they're up, and always just realize this important thing, and that no matter how much you help them out, generally, people are going to want more. The best way to succeed in this is to not be responsible for their greed by just giving them a layup, but instead give them more clarity, give them the direction that they should go. If they ask you whether or not this is something that they should buy and they acknowledge all the disclaimers and the risks associated with buying crypto, which really 95% of the market is some doggy doo-doo, then I'd say you can make the discernment on whether or not you decide to take them under your wing. The next key lesson is truly understanding risk and reward in every trade or investment you take. Look, the biggest difference between the people that consistently round trip their bag, meaning they make money, they lose money, they make money and they lose money, and the pros that consistently make 7-8 figures or more in these markets is from understanding how to manage their risk. It's so easy in principle, but it's the one that everyone neglects. A lot of the times, the round trippers, the amateurs, the newbies, they always ask, how much can I make? Pros will often ask, how much will I lose and is it worth it? This is where I can tell whether or not someone is a seasoned investor. Now, for me personally, every trade I take, I ask myself two questions. What is the upside and where is my exit if I am wrong? This here is your upside and your invalidation levels. So if the risk isn't worth it, I don't even bother. If I don't have an opportunity in a trade to make at least 3x of what I am losing and my probability of hitting is not good, then I'm gonna refine my systems first before risking more capital. So the big takeaway here is you have to understand how to calculate both upside and downside. If you're in the trenches, you're starting out with $100, are you gonna risk all your $100 on one play if that's all you got? Now it's a little different if you got $1,000 you're starting out with and you're only risking $10 or $20 per trade. If you cannot define your loss clearly, I would not enter. The best traders I know always have definitive risk and they're not just looking at high upside. Next tip here, always set aside money for taxes. Now, if you're living in Dubai or some of these other countries, or you're simply just a person who evades their taxes, it's not gonna apply to you. But for 80% of my viewers, this is gonna apply. Look, I'll never forget about the story of hearing this guy in Germany during the last bull run where he was making millions trading crypto, but he forgot to do one thing, and that was to save and put aside money for taxes. Now look, Germany is one of the few countries that have different crypto laws where you can actually get taxed even if you don't cash it out to fiat. This individual here, he made $20 million or more, and pretty much he round tripped his whole portfolio and he made zero. Now what ended up happening is he still owed the amount of taxes on those trades. Even though he filed for bankruptcy, taxes is something that you can never avoid. So until the day he dies, he is owing the government significant amount of taxes. He's never going to be able to get out of this loop. And there are so many people I know who end up trading crypto thinking, I'm not going to have to pay taxes on it. And when the day comes to pay taxes, they decide I'm not going to do it. This is where the stories of people who go to prison end up coming about. Look, I've been in crypto for a long enough time to know the IRS does not screw around. If you're living here in the US, at least find a way to cover some part of your taxes, folks. I encourage every single one of you guys to always set aside the proper amount. Now, this is where you really have to reflect though, is it worth for you to move to another country? This is where a lot of people move to Dubai. This is where a lot of people move to Hong Kong or different parts of the world. If you are a significant trader, look at some of the states that you live in. You're gonna get taxed significantly more if you end up living in New York City, California, some of these other states compared to if you lived in Las Vegas, Florida, Texas. So please don't have this mindset that, you know what, I'm good, I can just forget about it and wait for it later. No, always put aside money for taxes. I've heard some of the craziest horror stories where people are now in prison just because they didn't do this right. The tax system is still one of the most broken things here in the US, and the fact that the liability is on the customer, and if you don't do it right in an already complicated system, the punishment is you go to prison. I believe there's reform that needs to be made there. But for the most part, guys, do your best there. There are other tax saving strategies. So if you ever put a couple $100,000 into a project, it went down, you can scratch that off your tax bill. And for me personally, I bought a Bored Ape for $400,000 in 2021. If I ever wanted to save that much in taxes, I would just recognize it, I would just sell it, and then I would apply it to the tax bill that's coming up. The next tip here is you need to set those invalidation levels that we just discussed. If you are wrong, admit it and just get out. Every winning trade I know has one thing in common, and they know exactly when they're wrong and they act fast. If you don't have a clear invalidation level when you enter a trade, you are simply just gambling. So my rule is simple. If any trade I take violates my invalidation, if I'm in the trenches and I'm buying this next meme coin and it ends up like rugging basically, I'm not going to get rugged to zero. I've done that many times and I'm sick of it. I am going to cut my losses, and in moments where the market just pumps and that was just a slight dip and it goes up even higher, no, why did I do that? No, my system, taught me wrong. No, I'm just going to follow it and trust it. There are also going to be instances of that, but generally this system here is going to save you more money in the long run. Now, this key lesson that I've learned is still relevant to even beginners and pro traders, and it's learning to click the sell button as much as you click the buy button. Look, when the market's heating up, all you want to do is long things. You want to just keep buying and buying, and most people can do that with no hesitation, but they hate clicking the sell button. This is where investors and traders alike always round trip their gains. They watch a 5x turn into a 10x, waiting for the 20x, and then boom, it's gone. So the mindset is simple. Buying is offense, selling is your defense. If you don't sell, you don't make money. There's no point in you scoring 100 goals on the opposing team in the World Cup if you got no goalie. Because if the other team scores 101 goals on you, you're still gonna lose. Now, here's a huge learning lesson and something that might even break the industry as we know it. But tokenomics, guys, generally they're not your friend, and it's a very gray area. So don't always overtrust this way of investing. Look, for me, I used to always think good tokenomics means guaranteed success. Look, I've seen projects with terrible unlock schedules where literally they're dumping like millions of tokens every single week, and those projects end up going up. And the projects where the tokens are locked up for years and the vesting is crazy good for an investor, those are the ones that eventually dump. Tokenomics, yes, are important, but they're just one piece of the puzzle. A lot of the times too, this is a gray area where a project can set tokenomics and they can say 60% of it is treasury, 30% of it goes to the fund, 20% goes to the developers, 5% goes to airdrops and community. But who's auditing that? Who actually is in charge of that? Oftentimes it's just the project developer. So no matter how good tokenomics look, it does not guarantee success. It does not mean the developer does not have 100 different wallets on the back end that they can just mass buy up projects with. So don't often just look at tokenomics as a good or a bad thing. It can help you in your research, but a lot of the times I've seen good tokenomics where projects dump. Bad tokenomics, projects do good. Sometimes if there's crazy unlocks, the project can just buy back the project using those tokens and hold it up. Look, when I say crypto, 95% of it is a scam. It's generally for reasons like this. Now, out of that, there are still projects who honor tokenomics, who do include their community, who let other third-party auditors come in to review the books and to make sure everything is good. Now, generally, this is an industry though, where people are in it for what we call max extraction. They're here to make as much money as possible, and the devs are no different from you guys who are investing into projects. So just be careful when you're buying into things and just always go in it, not with an open mind, but assuming that it's a scam so that you can protect yourself in the case where things go down. Next tip here, left curve sometimes win. Sometimes the most simple and most obvious trades are the ones that are gonna help you make more money in this market. Look, you don't need 20 different indicators. You don't need to do the golden cross with the apple cider vinegar and the foot and dingus pattern. You don't need a 30-page thesis either. Sometimes the best trade is the one where there's a strong narrative, got in early, and you sell. I've seen instances where overcomplicating usually kills performance. I like trusting simple setups that are clear. I like to go heavier in on those trades and not to overthink the market and just ride the more obvious plays. There will be instances like this. Generally, we see it happen a few times throughout the year where you have a dumb, obvious, good trade to take. Those are the ones where you want to double down on, and it's in those moments you can capitalize immensely. The next lesson that I've learned, the key to winning in this market consistently is finding asymmetry. This means every cycle, the biggest winners come from asymmetry, where you're finding plays where the upside is 10x, but the downside is 1x or 2x. As I mentioned in some of my other lessons here, don't chase hype. Look for setups where even if you're wrong, you're not going to get destroyed. Next big lesson here, some of the biggest traders still end up getting washed. I've seen absolute monsters who have ripped multiple 8 figures in 2021 just trading, who got rinsed this cycle around. No one is invincible. No system is perfect forever. In crypto, humility is the way that you survive. Here's what I mean by that. If you are ever surrounded by people who feel like they know everything, oftentimes those are some of the more arrogant, and generally financially, they are some of the most poor people too. The people in my community, the people in my circle that are often the most wealthiest, that are the most richest, are the ones that are still students. They're still humble in understanding how much more they need to learn. This is where if I'm networking with someone and all of a sudden they're an industry expert in every single thing that they're talking about, I'm like, all right. I've met billionaires who still act as if they are a student in the game, and that's the same thing within crypto. Just because someone is good now doesn't mean that they're going to be good forever, and every cycle resets the playing field. So I encourage you guys all to stay humble and to stay adaptive. In crypto, the moment you think you're invincible, it's usually in those moments where you get wiped out. The next big lesson that I've learned is that community is going to be one of your best secret weapons. Look, at a certain point, solo traders get burnt out. If you're surrounded by sharp people, you're going to be able to catch plays that you would have missed. There's going to be a point of time where you feel the burnout, where you end up being sleep deprived and you need someone else to help you out. I've not seen anyone in the industry succeed all alone. Everyone is tied in with some kind of community. The best traders that you know all started out getting mentored by someone within the space. If they didn't, they probably aren't one of the best traders in the industry. So how do you find good communities? How do you find good like-minded individuals? One, I could shill our community here And yes, I'm going to do that. Check out Kaizen down below. But number two, this is another great way to find real good community, and that's through in-person events. Anyone who DMs me, there's a 99% chance I don't ever respond to those DMs. It's not because of anything personal. You didn't do anything bad to me. It's simply because there are just too many DMs that I get, and it's just not a good use of my time. But the moments that I do connect with people are from real in-person conversations. I've talked to a lot of people online, and a lot of those online interactions have not panned out. The relationships that have actually blossomed into something meaningful today have all come from in-person events. So go to the next conference, go to the Bitcoin conference, the Token 2049 conference, go to the NFT conference with a lot of those sweaty, not going to get into that either, but find ways that you can actually communicate and connect with people in real life. This is how you build real trust, and this is where real alpha flows. If you're not doing that, you got to build up your personal brand somehow. And from that, you're going to be able to connect with other traders. But even from that, you should always try to meet up with people in person. Crypto is such a digital thing, and everyone's so used to being anonymous, where if you're able to break down that barrier and get into the right group chat, you will significantly improve your edge. Now, the next lesson to be on the lookout for is the fact that the meta moving forward is generally going to be about how fast and how quick you are, rather than how sharp you are and how deep you can think through certain strategies. So there are going to be moments, guys, where someone does tweet something on X, and if you're able to react to that faster than someone else, you're going to be able to make money. Information right now moves price faster than any kind of analysis, and we're in a part of the cycle where I believe for the next few years it's always going to be like this, where Bitcoin is going to be the most sensitive indicator to news coming out. Keep in mind, Bitcoin is a 24/7 market. S&P 500 usually reacts, but anytime we get inflation data, jobs report, or a country wants to start a war, Bitcoin always goes down. Bitcoin is going to be very reactionary to news coming out in the market. So if you're able to spot that news, identify it, and be quick on it, this just means having notifications on, having your phone on you, having your screeners telling you any big breaking things that are happening, or being in those group chats where your friends are able to alert you. When news breaks and you react, you're going to be able to capitalize on the easiest trades of your career. A lot of times you don't have to be smarter. You don't have to know what the news is, but generally, if it's good news, long. If it's bad news, short, and you're going to be able to make money. Now, the last lesson here that I want to talk about is generally where we're seeing crypto headed. Look, forget about all the indicators, forget about the 4-year Bitcoin cycle. Assume that anything that's happened in the past is not going to happen again in the future. I do not care about the 4-year cycle. I don't care about the altcoin cycle. I don't even care about the flow of money. I'm here to win in the market. I'm here to help you guys win in the market. And this also sometimes just means letting go of previous biases and being okay with being wrong. At the end of the day, the biggest wins that I've seen come from having a system that you can trust, building your market edge, and all the tips that I mentioned in this video. Some of you guys are going to watch this entire video till the end. Watch me right now, and you're gonna have the most clear, actionable things you can do. Some other you guys are gonna watch this video, say that there was no value at all. You weren't able to extract anything, and you pretty much are just gonna get rinsed. You're gonna lose money once more. What I've realized when it comes to this industry, there's clearly a skill gap, but that skill gap is something that you're gonna be able to overcome and be better at as long as you have the mindset to do so. Generally, the trend is the ones who are negative blame others, blame people that they lost money, blame themselves, and they're just pessimistic are the ones that continue to lose. I've literally seen members come and go within our community where all they do, they just cry. They complain, they cry, then they go on other accounts, they complain and cry. They say it's your fault, his fault, her fault. Those are the ones that have missed out on all the plays where if they just locked in and realized you take responsibility, you play the system, you build the system, and you stay patient, they would have hit multiple 6, if not 7-figure trades. So I'll end it with this. Generally, emotion is going to be the enemy. Get your emotions out of it. Build systems and create consistency and keep it simple, okay? You don't need to overcomplicate the market and assume that 95% of anything you buy in crypto is going to be a scam. And for the 5% of things that are real, they're going to keep building. But who knows, even if price action does reflect the legitimacy of a project. This game is constantly evolving, and our goal here is to maximize how much we can make from this space. And I'm here to help you guys extract as much as you can. If you want to get more alpha and some of the stuff that I'm talking about, be sure to check out the links down below in the description. If you're trying to get started out with trading, I have a link for Blowfin down below. You can join Kaizen if you want. No pressure. Don't care really if you do decide to join or not. We got a lot of people in there already that are hitting their trades. But if you're looking for a community and you're looking to make more money in these markets and have a better edge, we're here to help you figure out what that is and to help build that in you. That's it. Love y'all. Peace.